If you don't have that set of data and you don't get it on a regular basis, you're basically driving with no windshield. You're driving blind.
1, 2, 3, 4.
Hey there. Welcome to the Small Business Black Holes podcast with Alan Pentz, where we help you navigate today's chaos with precision. Your host, Alan Pentz, has 25 years of experience working in business and government, and he knows how the old rules have fallen apart. Each episode, we'll explore how to thrive in this new landscape by mastering the small business black holes while everyone else is still figuring them out. Let's dive in.
Excellent. We are back on the Small Business Black Holes podcast. I'm here with Tonya Berenson, and we are both in Europe today. So what are we talking about today?
Well, a couple of things. I think we're going to talk about accounting, right? And the importance, this seems like an obvious, right, Alan? But accounting in business and what you're seeing, some of the people that you're coaching. Let's start off with that. It's not surprising to me. It's like even I would know to think about accounting, and I know nothing about accounting.
Accounting is a dirty secret of entrepreneurship. So no one likes it. It's like medicine, right? And it's like getting receipts together and getting them classified the right way. And it makes everybody want to go to sleep because most people who are starting companies are good salespeople. They're not really good accounting people. So in building Owner Institute, I'm working with a lot of companies now, and I definitely see across the board, almost nobody is doing accounting either. Most people are getting by, right? So they're doing enough to pay their taxes, but they're not doing enough to really run their business in I don't know if you want to say correct, but like in the way that I think you absolutely have to. Because look, what is accounting? Okay, as Warren Buffett said, it's the language of business. So if you don't,
language,
it's certainly the language. It might be your code or whatever. And my take is you can survive for a certain amount, kind of winging it. So I have one client who is managing, is small enough business. He's like managing to the bank account. So he's like, oh, money came in. So I collected. I kind of vaguely know I need to pay these vendors or these software, whatever. And so he's kind of just managing to the bank account without seeing the full accrual of, accounts receivable, accounts payable, and then like maybe reconciles once a quarter.
At what revenue level was this particular client?
So they're somewhere below 2 million. So above 1 million, below 2 million. So I've been talking to that person about, look, we really need to get a bookkeeper in place that can do this on a regular basis.
And do they go like this?
No, I think they're open to it. Like, I think below 1 million, maybe, I'm starting Owner Institute. I only have like 20 transactions a month, which is starting to get to the point actually where I think I need to bring in a bookkeeper. So I'm actually looking for somebody. If people have recommendations, and if I can find somebody good, I'm going to have them work with other people who need more and better bookkeeping. And it's so cheap now with offshore resources. There's just no reason to not, you're probably paying a couple $100 a month to get your books not closed, but you got all the transactions in, what you should be collecting, what you should be paying, the trends in your business. And so I guess my point is, if you don't have that set of data and you don't get it on a regular basis, you're basically driving with no windshield. You're driving blind. And you're making decisions in your business every day that you don't understand the basic facts of. That is a really bad position to be in. So certainly when you're in a bigger business, that gets crazy, right? And I think most people have taken care of it by a certain point. But even larger businesses do not have a rhythm where they can close out their month by a week or two. And look, I have had multiple rounds with my finance people on I want the data in 5 days, right? And there are things that happen that cause that to be difficult. We have subcontractors and they don't get their bill in on time and things like that. But you can get, I can get 90% of the data by a couple of days after the month closes at this point. Now I'm a much bigger company. I'm full staff, get it. But it doesn't have to be instant. But by the middle of the next month, you should really be able to say, this is where we've been. and I have historical data and I can look at the trend lines, and now I know what happened 2 weeks ago. So that's going to help me make the decisions for the next 6 months, right? And being able to track the trend lines of revenue, net income, expenses, cash, like in a real trend line over time is absolutely critical. It's the first thing I'm putting in. So we're eventually going to build our own tool, which I've kind of referenced before, the craziness of building your own SaaS tool. But I've been experimenting with a couple of financial modeling tools, and they're really good. They're easy to use, but you need updated QuickBooks, right? Or Xero or whatever you use. And, tracking those trend lines, even though you might instinctually know in your head, hey, like this is how much cash I have, this is how many customers I've sold, looking at the data on a regular basis changes the way you operate, and it changes the decisions you make. And so I think it's absolutely critical for every single person to have up-to-date, and if you're not looking at financial data, and if you're not looking at it on a monthly basis, you are driving blind with your business.
What's the struggle for folks of this? Is it just, I don't have time? It's just accounting is just not sexy. I don't want to think about it. What would you say to,
All of the above. Plus, the accounting profession is horrific. Okay, let's just be clear. There are not enough CPAs in the world, or at least in the United States, right? So it's so complicated. Like, I'm paying taxes in 30 states. I file an extension every April. And no, I haven't paid taxes before October 15th in I don't know, years. So we just automatically extend to October. You have this lagging time period. I mean, so the accountants, so that's part of it. So the accountants are overloaded with work. So just finding an accountant that's adequate for paying your taxes is a struggle. And that base level ability and service level, right? And so that's a struggle. So to go from that to, I'm going to give you data in a timely way to help you run your business, that is not in the accountant creed at this point. Very few, maybe you'll find one that's great and does it. And if you go listen to somebody like Greg Crabtree, that's been his whole mission, is understanding that the tax part is a commodity, really. And really what people should be trying to get is the financial data that they can use to make decisions. So accountants are there to help you pay your taxes. They are not there to help you run your business. And I think you just have to accept that you're going to have to find other ways. Now, at Owner Institute, we're trying to create tools and a service that will allow people to do that. You've got...
Make it easier.
Yeah. People like Simple Numbers. They're fantastic. We use them at my company. But go and find somebody who can do that. And I guess now they call that CFO type services. I think that's kind of ridiculous. A CFO should be dealing with the funding from investors and what our M&A strategy is, not what's the 12-month revenue trend, right? That doesn't seem like the CFO level of data. And a CFO can get down into I'm going to do analysis by cohort, by this and by that, Okay, that's great. And when you get bigger, that's useful. And there's a diminishing return to financial data when you're small. But don't skip it, right? Because...
But it's an investment you need to make now, right?
Yeah, so what I say at minimum, be tracking on a trailing 12-month basis, revenue, cost of goods sold, so then you get your gross profit or gross margin. Then I kind of lump in most other expenses, but you can break out significant expenses that you have. If you do a lot of marketing, maybe that's something to track, but you want to measure. I kind of do all of their expenses except for labor, right? So you want to be able to pull out your labor, and then net income, and you want to be able to measure all that, and then your cash on a 12-month trailing basis. And also, if you have a lot of debt in your business, you probably want to track that and your coverage ratio. But if you don't have a lot of debt, you can kind of not focus on that, right? So really off your balance sheet, you just need to track your cash position. And what I see, the problems I see are, okay, first of all, cash is not accurate. It's based on an accrual of accounts receivable, not what cash you actually have. So that's got to be fixed most of the time. You got to be tracking those accounts receivable, accounts payable. So that's the second thing, that's usually pretty good. Accounts receivable, accounts payable. The thing I really see is that people do not break labor up and put labor into cost of goods sold. So basically,
Cost of sold.
yeah. So like your COGS is everything that you need to provide the service to the client directly, right? So if you have like a construction business, you have materials, right? Wood and nails and blah, blah, blah. That's a direct cost, but also the labor that actually goes out, the carpenters and finishers and people who build the house, right? So you got to account for their labor. That's how much it costs you to deliver the service, right? But then you have all the back office where that's selling general administrative expenses, overhead. There's 1,000 terms. People use management and admin labor. So that's like the person running the company, your bookkeeper.
It affects all of it in as well, right?
Your salespeople, your marketing, blah, blah, blah. So you want to be able to first, out of 8 companies now, even ones that are larger, I haven't seen one that's tracking accurately, breaking out direct labor and putting it into COGS. So their gross profit is the same as their revenue. Or maybe they take out some materials, but they do take out materials. So if it is a heavy material business, then it's a differential. But most of them, a lot of them are service businesses, so it's 1-to-1. And so they're really not understanding the labor, and labor is your largest cost almost always, right? So they're not understanding
Yes, regardless.
the
Right.
cost of their largest expense that goes toward delivering to customers. So you got to start saying, hey, Jack and Jim and Jill are out delivering to customers, whatever it is, your product or service. I'm going to create an account in my ledger under my P&L for like customer labor or whatever you want to call it. And that's going to be direct, right? And then John and Sally are in the back office selling stuff or doing marketing or, admin. So they're going to be in the overhead management admin labor or SG&A or whatever you want to call it. So that's a really crucial first distinction that people need to make. And I see almost no bookkeeper. I mean, to me, a bookkeeper should be saying, isn't this direct and not, just lumped into one thing, right? And I get it because people come out of like there's one person in the company and why you're not going to divide your time into different accounts. There's one labor account, right? And you should be paying yourself a salary and that salary should be reflected in your costs, right? But
as you've said before, right? Lesson.
Right. So as you grow, I think people just have this default thing and they never change it, or they don't change it till way, way down the line.
So when did you learn or when did this become clear to you in your experience with your company?
Yeah.
Or did you know this right away?
No, I was probably 4 or 5 million before I figured that out. I was working with Greg Croucher.
With MBA, right?
Yeah. With my MBA, I knew what COGS meant, but like, I didn't understand why I should care about it for a small bit, So first of all, so that would be a good transition into the other article I wrote last week about why your MBA doesn't qualify you to run your business. But just before we leave accounting, just remember, it doesn't have to be that complicated. The basics are get your track on a rolling 12 basis if you've been in business 12 months or rolling whatever it is if you haven't. Your revenue, your cost of goods sold, which will give you your gross margin, gross profit, your net income, your cash, your accounts receivable and payable, and debt if that's a significant factor in your business. That's it. It's like 7 things, right? And then you can lump everything else into like all other expenses. And then the next level, so that's basic, right? But I really want you to put one past that and break your labor out so that it's in cost of goods sold. And you can look at it as overall, in the overhead SG&A. So that's like maybe step 2, right? It's like, first I'm just COGS is all materials. Then I add in my labor. And then I break my labor out of all other expenses for management and admin. I think at that point, you're pretty good. Like you can then go forward and say, in my other expenses budget, I'm doing a lot of marketing. So I really want to measure the effectiveness of that marketing. So then I might break out marketing too. So there's a few things like that. Like maybe your business has a lot of expenses in the back office for a certain thing you want to look at. But like at a certain point, it's no point. But you don't want to get back to just having a P&L, which is like every category, blah, 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 blah. Because like rent doesn't change every month. So why are you looking at it and holding it accountable to some other measure, right? So like the reason you want to break it out is you want to hold marketing accountable to revenue or whatever it is you want to do, usually to revenue, right?
And that can inform your decisions going forward.
Right. So like if I double my marketing expense and my revenue doesn't go up within X number of months,
Is it worth it?
and I got no ROI. So now I know. But like the ROI on your rent doesn't make any sense, right? So don't start tracking like every software subscription and that's nonsense. That goes all into other OpEx, right?
Mm.
So just you need those like 7 or 8 things, core things, and that's it. Like you don't need to worry about it after that. So that's not that hard. And it's all it is get like a decent enough bookkeeper.
Like that could be the hardest first step once you find somebody.
And look, I want to have direct versus management and admin labor. I want to track my marketing. I want to do whatever. And I want something, you can create a template where they can report it out to you in those categories, or you can go hire simple numbers or, like eventually we'll have something that will help you do that. And I'm starting to institute that now for our clients because, the other thing I was going to say before is like, this is the thing I found about business coaching too. So to close out accounting, just do that basic stuff, right? That's the language of business. It's the key data you need. Make sure you can get it by the middle of the next month. That's a reasonable target.
Mm-hmm.
It does mean you have to like do your receipts. And, that's Tonya can testify. I freaking hate that. I hate it. I hate it. I hate it.
Glass in the eye would be better.
Right. So I get it. I share your pain. I don't want to do it.
Or you have to do it. You have to do it. It's just something, it's a habit to form.
I know.
Like with
You gotta
any other
hire
habit.
someone.
Go to the gym.
Yeah, exactly. I hate receipts more than the gym. So you got to do that stuff to get the data. And, you can automate a lot of stuff now if you're paying for your credit card or, you're using, PandaDoc or whatever the, signature softwares are. You can get all that stuff integrated and exported into QuickBooks and you can, use apps for expenses and it goes automatically in and the bookkeeper can figure it out. And then you just got to like do some work with a bookkeeper to get all the data and then go find like a coach or a company that can help you with CFO services, that can just show you how to look at it every month so you're tracking it, right? Oh, actually, so that goes into the other thing I wanted to talk about, which is my learning about business coaching. So, I'm setting up this company owner institute and our goal is really to get the definitive coaching, but small to medium-sized business coaching methodology out there, right? So I'm going through and looking at every area of business saying, what did I learn? What have others learned? What have other people done that like make that's like the bare minimum to more advanced thing that I need to do in each area of like my business, which my strategy, my marketing and sales, my finance, my team, all going throughout the entire company, trying to look at like, what's the maturity model? Like, how do I go, depending on size, right? So like, I'm a $5 million company. I don't need an advanced ERP system like a $25, $50 million company. So like for me, my maturity model is going to be a little different than the larger company, right? But certainly within that, like if I'm not breaking out my labor, my gross in my cost of goods sold, I'm in a rudimentary state that I've got to fix, right? And so Owner Institute's goal is to like kind of lay out that pathway for each company at each size. And I'm kind of trying to do it in a really scientific way. But
in a way that is really actionable for business owners, right?
And so I've been exposed to a lot of different coaching methodologies and I've used a lot of them, but I highly recommend all of them. So let me start by saying that like any business coaching is better than none. But what I've realized is like in the business coaching world, the coaches don't deal with finances. I mean, it's insane, right? So it's like the core goal of a business is to make money for the shareholders and owners. That's all it's about, right? When you break down any business, it comes down to that. And maybe some people don't like to admit that, but
That's true.
But the reality is we have a capitalist system. So people demand services and products. And as entrepreneurs, we bring capital and a know-how to make money off of those desires, right? So like as Adam Smith said, it's not to the benevolence of the butcher and the baker and the whatever that we owe our dinner. It's to their self-interest, right? So
Of course.
in the end, so that was in whatever 17 blah blah blah. So like that's been true for 400 years, 300, and
It's still true, Alan.
the goal is to make money, right? And so you're a business coach walking in, and you don't even ask like how much money the company makes, or like are they managing their labor effectively? Are they making a profit? I mean, in some of these methodologies, you could coach someone for years and never even know how good their business is.
How is that though? Is it just too hard to? The coaches don't know them. They must know this, or one would hope they wouldn't be coaching. Is it too hard?
Someone I know told me, I won't reveal his name on the podcast, but that most business coaches are financially illiterate. Not me. No, I had to learn though. So I think that they think of finance stuff as like a separate service. So they're to coach you on your people, your team, or your strategy, or your sales, or something like that, your sales process. Or like I would say that in business coaching, there's probably like a lot of team and high-level strategy stuff. That's the main, and like meeting rhythm process for the leadership team. So that's like the main business coaching. And then they look at like sales as a separate kind of coaching thing. And like finances is like that CFO service thing I was talking about. They don't even recommend that you go get it though. I mean, which I find like if I was a business coach,
Very surprising.
I wasn't working with somebody monthly to look at their numbers, I'd be like, what are you doing? Right? You got to do this. Unless you're some kind of financial wizard yourself and you're doing it yourself, right? But almost nobody's doing that, right? So my take, like when I was doing it, I didn't think it was weird. And now that I'm setting up what I'm going through and I'm trying to think scientifically about how to grow and mature businesses at different levels, I'm like, how could I do that without understanding in detail your finances? It's impossible. So I just don't.
That's studying about Owner Institute, though, what you're building.
Yeah. So it is a weird realization. And I was like, how did this happen? Like, and I think it's because like coaches don't like finance. Like they're not finance people, so they don't want to talk about it. And I guess I always come back to this thing that is a Warren Buffett quote: accounting and finance is a language of business. You have to talk about it, or else you're not really talking about business. So that was a big like learning of mine, like going through this and understanding how weird I don't know how this whole architecture of the coaching world got set up, but it definitely, there are things in it where there's just like how did finance get left out of the entire business coaching architecture?
That's a big black hole right there.
Yeah. Or how did like sales is a totally separate thing where it's like, oh, go get a sales coach. It's like, really? Like, I mean, that's great if you have a big sales organization and stuff, but like, like for me, I don't need a sales coach to tell someone like, do you have a CRM and are you tracking your leads and closing rate in your CRM? I mean, that's not rocket science, right? I mean, every business coach worth their salt should know to ask that question, right? So, or like, are you measuring your marketing spend and the ROI you get from it, right? These are things that people don't talk about. And I just coming into it, I was like, wow, this is insane. Like, what are we doing here? What are we talking about? Essentially, like, we may be talking about one or two elements out of 5 or 6 that are core to the business. That doesn't seem like an adequate service to provide.
So you've evolved in your coaching when you realize that people aren't getting this.
Right. Because I know this is embarrassing for me to say because I did it, right? And this was in my volunteer coaching, so it's not like I was sitting down designing a service because I was just kind of doing it on the side and through one of my business owner organizations. And I would coach people for like 6 months. And I had a couple of people twice, right, through different 6-month intervals. And I had one company where like during the second one, I got this sense that there was like something wrong. And so I asked to look at the financials and I did. And the person been losing money for like a year. And none of the coaches knew that. And I was like, we went in and did some analysis, and it's like, you're not charging enough for what you're doing. You're getting a 30% gross margin. You cannot sustain this business on that 30%.
And so had they been, like pulling their hair out? I mean, not understanding what was wrong?
They weren't articulating their problems. They would say like, oh, I need to get more leads and do better marketing. So then they kind of like talk about the marketing, how to improve their marketing. But the real problem was they weren't selling their products and services for high enough gross margin. So it was really hard to overcome that, right, with the back office.
Yeah.
So, I mean, like a 30% gross margin, if you could run a lot more volume through, like maybe you could cover the back office better. But they, like so they would talk about like, I need more revenue, I need more leads. But they wouldn't say like, oh, I'm losing money. Oh, and here's my gross margin structure. And, anyone with half a brain would say there's no way a company like yours can survive on a 30%. Because, it's a bespoke business that probably doesn't scale very well. So like you need to have like a 50% gross margin here to really run a good business. And that means charging more. I have all these bad accounts that like hammer me down on price, and I have a few really good ones. And it's like, okay, now we need to focus on the few really good ones and figure out how we get more of those. So stop marketing to the crappy accounts because you're never going to get enough volume out of that. So it led to all these different things. And I was sitting there going, oh my God, how have I been committing coaching malpractice? So I'm not saying, to be clear, I don't want to come out at people and be like, oh, you're all idiots, right? No, I did it too. It's the architecture of business coaching that we all just sort of like grew up in and understand. And I finally realized with this person that I was not doing them. Look, I wasn't getting paid for it. So, but the reality was I felt like, man, if I had known this a year and a half ago or a year ago when I coached you the first time, you could already be out of this. And so that really hit me in the face. And that was one of the key spurs to going into creating Owner Institute. When I stepped down as CEO of my old company, I started doing it, and that was one of the impetuses, and there were a few others. And I was just like, oh my God, this is so, business coaching needs to be changed so that we're dealing with all these issues and we're not letting somebody flounder like that.
Right. Unnecessarily that's the learning moment for you.
Yeah. Oh, 100%. 100%. So cool. Well, I think that's our time for today.
Yeah. We have more to talk about next time then.
Yeah. So my method today, get your accounting in order. It's simple. Go get those 8 things. Get a good bookkeeper and talk to them about setting it up for you. Probably your bookkeeper is not going to be able to set up your perfect dashboard, probably. So you're probably going to have to go get somebody, if you're not yourself into it, like someone like Simple Numbers or Owner Institute, or there's a bunch of CFO type services out there. And then really understand in the business coaching market, if you're working with a coach, go and ask them about, hey, can we look at each aspect of the business and make sure you're covering, like, am I measuring my marketing spend right? Am I tracking my sales leads in a CRM and making sure that I'm seeing what my conversion rate is and trying to improve it? And like, have I thought through all the financial metrics I need to look at on a trailing 12 month and month over month basis? So, those are things I really urge you to, as a customer, to advocate for. And a lot of coaches can probably do it if asked, but for some reason, just isn't done.
And do it early, right? You're going to save yourself a lot of headache down the road because you will need it.
That's right. All right. Well, thank you. And until next week.
Talk to you soon, Alan.
You've been listening to the Small Business Black Holes podcast with Alan Pentz. For more insights on mastering the new game, follow @Pentz, that's APENTZ on X, and make sure to subscribe to the podcast so you don't miss a single episode. Thanks for tuning in, and remember, in today's world, you don't follow the rules, you write them.